House prices at record levels. Let's have a look. Hello everyone, Florian.Heise here and welcome to another episode of HeiseSays. Well, house prices are at record levels. The first recession we've had in 28 years. In some states, close to 9% of those people employed in businesses supported by JobKeeper. You've got JobSeeker propping up the huge number of unemployed, highest level it's been in years. You've got mortgage holidays allowing people to not pay their mortgages. You've got a moratorium on evicting people renting. We've got international tourism gone. You've got international students not arriving. You've got holiday apartments flooding the long-term rental market because there's no one traveling anymore. And yet, we have housing at an all-time high. What does this tell you? That housing is magical and can never falter? Or is it a sign that our political leaders and the establishment do not want the property bubble to correct? They will intervene in the market, push the consequences off to future generations and down the road because they don't want it to adjust. Let me know which one you think in the comments, guys, while I have a shot of my coffee. So here we have it on domain, you know. Australia's house prices hit record high, and we'll go through that article in a moment. But then Perth house prices reach 3-year high. Brisbane house prices reach record high. Tropical retreats are soaring, a sea change trend. Melbourne property at record high. Sydney property at record high. Canberra property at record high. So, there you go, everyone. This is the thing. They're intervening in the market, propping it up, supporting it. Who's going to pay the price? Will we? Will our future generation, our children, or our children's children? How hard is it already to get into the housing market? You know, what about wage growth? It's non-existent. The RBA are fantastic at making predictions about wage growth. We've got a cash rate that's so low. Any hope of people making money off their savings is a joke. You're literally going backwards. If you just invest in a high interest saver account like a CommBank one, I could get 0.5%. Inflation rate's 0.9. Sure, you can beat it if you jump through 50 bloody hoops. Like I'm with Rabobank now, the bank with the crappiest, most primitive app, and I get 4 months bonus interest. Yay. We're living in a clown world, everyone. So Australia's house prices soar to record highs over 2020. National house prices leapt to new record highs at the end of 2020, scotching dire predictions that COVID-19 would trigger a complete collapse of the market. More and more I read this, I suspect the predictions done by the RBA and the banks were done to manipulate our politicians. With the median house price in Sydney now at an all-time peak of 1.2 million, Melbourne at 936, Canberra at 855, every capital city recorded massive growth over the past year. Only Darwin and Perth ended up shy of their previous price peaks. The latest Domain House Price Report, released on Thursday, revealed that nationally median house prices rose 4.1% over the December quarter to 852,000, the steepest quarterly jump in 4 years. Now let's see if they make a mention of the fact that banks, the mortgage holidays are going to come to an end in March. Let's see if that will impact the housing. We need to keep it's still only January, guys. We need to, keep an eye on the market and see what happens in March. Some people will say, no, don't worry, Florian. It's an election year. They'll just start intervening more. It'll be Mortgage Keep. I really, how can I trademark that? Can I get royalties from the government when they invent Mortgage Keeper? I don't think I could. So, it marks a stunning recovery from losses suffered during the pandemic, arriving even earlier than predicted. The December CoreLogic Property Price Index put Australia's house values on track to surpass pre-pandemic levels earlier this year. First recession in 28 years. And the phenomenal growth is set to continue, said Domain's senior research analyst Nicola Powell. And look in the US. So there, on my HeiseSaysUS channel, we'll just look at the growth in housing over there, how crazy it's going. Could this be? Sure, we've got a whole lot of intervention in the market, but what about the fear of rampant economic stimulus, money printing, quantitative easing, that people are worried that the purchasing power of their money is just going to evaporate, so they're going into property. They're going into property. Rather than gold or shares or crypto, they're going into property because at the very least, it's something that they can use. There's another argument, everyone. Everyone needs a home. So, I mean, have a look here. Sydney, 6.7% year on year. Melbourne, 3.9% year on year. Brisbane, 5.6% year on year. Adelaide, 6.1. Canberra, 9.1. Perth, 6.3. Hobart, 12.4. And people are telling me everyone are just leaving the mainland, going to the island. Darwin, 3.6. And nationally, 5.8. And don't get me wrong, I love Hobart. I like the Bogues. The Bogues beer and nonny. Actually went to Tasmania for an architecture student exhibition. It was great. So the year 2020 ended with so many new records. The resilience of our market is pretty remarkable. Well, can you actually claim that the market is resilient? We can't really, because the government is intervening. So it's not, we don't really have a market. We could say, let's requote the doctor here. Let's say, the year 2020 ended with so many new records. We can really, it's really a testament to the government and Reserve Bank's ability to ensure the continuation of the property bubble. What do you think? Do you think that's a bit more of an accurate interpretation of it? Or am I just too cynical, guys? Am I just too cynical? I mean, that very well could be true. I am getting old. I know when I hit the big 4-0, guys, then it's game over. Then I'm just 40 onwards. Then you can officially get your old man grumpy bastard card, because I've been training for this for the last 25 years. And I know they're going to be older guys. They're just laughing at me, calling me a young whippersnapper in the comments. So with the historically low interest rates likely to stay for the near future, we'd expect this level of activity to continue. So we'll see more price growth throughout 2021. We might see a price decline in certain areas that are more vulnerable, like the inner city rental markets and the CBD, particular Sydney and Melbourne. But when international borders reopen, we'll see migration and overseas students return and prices recover. The lure of Australia globally will rise too, because of our success in controlling the pandemic, the healthcare on offer, the lifestyle and climate. Such optimism has been buoyed by some of the eye-watering price growth that has just been revealed, despite the imminent end of government stimulus measures such as JobKeeper and mortgage holidays. Consumer sentiment remains bright, with the economy powering back more strongly than expected and unemployment remaining lower than imagined. The median Sydney house price rose by 4.8% over the December quarter 2020 and 6.7% year on year. Melbourne also rebounded strongly for the last quarter at 5.3%, boosting the year's rise to 3.9%. But the price rises in both cities were dwarfed by some of the results seen in other capitals. Hobart was the country's best performer, with a stunning price rise over 2020 of 12.4%. Wow. A new record of 564,000. Well, guys, Tasmania ain't going to be cheap much longer. You'll probably have to go to the west coast in some little shack somewhere. And Canberra in second place at 9.1%. Tourism is a big industry in Tasmania, which has been hit hard by the virus, but in Hobart, they're seeing a greater emphasis on the rental market and city prices have rebounded, the doctor said. Owner-occupiers and first-home buyers have both been encouraged by low interest rates and are competing against fewer investors in the market. Canberra has also been less affected by COVID-19 because its economy is government and public sector led. Yeah, it's a complete separate world. That's the danger when you have our political class and the bureaucratic real leaders making all these decisions, being in an isolated bubble from normal people. They're not seeing the impact of their decisions. So, with a high level of employment, and there are more buyers than stock coming on the market. Elsewhere, Perth rose strongly at 6.3% to 563,000, while Brisbane rose 5.6% to 616, and Darwin by 3.6 to 533. The unit market has underperformed generally compared to houses, with a rise in the national price of a median unit of just 0.9%, but that's highly dependent on location. Adelaide saw unit prices jump by an incredible 13.5% over 2020 to a new record median of 350. Darwin saw a leap of 7.3 to 285. Yeah, but Adelaide and Darwin, that's going to be investors and people coming from Melbourne and Sydney just seeing these prices, and because they've already been anchored at high levels. If you live in Sydney or live in one of the other cities, the anchor price you have are the prices that you're used to looking at. You know, Sydney unit, 700 grand. So 350 seems like a bargain to you if you go in Adelaide. That's a persuasive technique as well. So interest in Adelaide property remains elevated as affordability and an enviable lifestyle draw prospective buyers. Are there any jobs in Adelaide though? The local property market continues to perform to its historical benchmark, supported by lower mortgage rates, significant government stimulus and mortgage holidays, and less exposure to changes in investment activity and overseas migration than other capital cities. 3 of those other capitals saw their unit median prices dropping. Sydney down 0.3, Canberra down 1.3, and Brisbane down 3%. So there we have it, everyone. House price growth everywhere except for units. All thanks to government intervention, but also potentially due to people's fears, due to the inflationary effect of government intervention in the markets. What do you reckon? What do you think? Are you jumping in, or are you waiting for March to see what happens? As always, thanks for watching. Please like, share, subscribe to the channel. If you're a fan and enjoy the content I cobbled together here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, and I'll see you next time. Bye for now.